All right, everybody, welcome in. I sent an email. Let's do a little housekeeping first. The final day of grace for everybody to get everything in, right? So nobody's got any late penalties. Nobody's been docked for anything. Now, invariably in a class like this, there are people who have not watched the first lecture. There are people that have not joined us for a lecture. There are people who have not done the readings. There are even people that have not done a single solitary assignment, right? We know that happens, and people just go, oh, God, I'll catch up. Oh, man, what catching up that you have to do. Lots of work, right, to get caught up. So I wouldn't even grade anything if I didn't really have to, right? Because, I'm like, hey, you get out of it what you want to put into it. And most of you have put in a lot of effort and a lot of work, and I appreciate that. However, the time for grace is coming up in 16 days. So on April the 28th at 11:59 p.m., that is the drop dead deadline for everything. Make sure you've got everything submitted, everything done, okay? And everybody will be fine. Any questions on that? And now you can go ahead and do your final exam. I've already put in the last week's discussion. So all assignments have been posted. All discussions have been posted. It's just a matter of you going in and getting everything done. Question? Awesome. All right. So it's really good seeing your, some of you have already completed your final. I haven't graded anything yet, but it's kind of cool. Is anybody there that would say that it's okay to share yours? Anybody that would let me share theirs? Who doesn't have a problem with sharing your final exam?
Bobby, you can share mine if you want.
You can share mine as well.
Now, y'all in 504 or 404?
504.
504. Let me make sure I'm in the right class so we can see these. I'm in 404. 504. See if I can find these. Give me just a second. Or maybe easier for you guys to actually share it on your screen. Anyone got theirs if they could share on your screen? It may not take me long. Hold on a second. I'm logging into 504. Yeah, but you guys have done a really good job. I think that's the good thing for me as a professor, to come in and to see your work, right? And actually be able to see you guys bringing in things. Let me go to final exam and see if I can pull something up here, if I know how to navigate this. Yeah, it's really rewarding to me, though, to see you coming up with the stuff that y'all come up with. Final exam. Here we go. All right. Who said that? Doug, you said I could share yours, right? Did Doug say that? Yeah,
I did, Bobby. I'm sorry. I'm driving, so I'm going on and off mute. But yep, share it.
All right. Let's look at yours, Doug. And we'll let everybody give you a grade when we're here. How about that? All right, so let's pull Doug's up. Move everything over so we can see. Everybody sees the screen. So let's see what kind of a job Doug did. And we'll just grade his together. Let's see. Doug. Let's see. Here we go. Doug's investment plan. It looks like you did it in PowerPoint, which is pretty cool. So we can get her open here. Come on, little computer. Everybody having a good week? Are y'all all good, mentally? Some of y'all that have more than one test. Isn't it cool that you get to finish this class before the finals and the other classes? I hope that you appreciate that, right? I want everybody to be done, so you don't have to worry about anything in May with my class. You're done on April 28th. That's our last class. It's our last day. It's our last everything. Now, I was going to say this. I don't know if any of y'all are in Tuscaloosa at all. I better not say this. Let me see if my wife's in town or in the house. Hey, Beth, are you in here? No, so she wouldn't be mad if I did this. I started to say if any of y'all were in town, in Tuscaloosa, it might be cool, like if we all met in a classroom for our last class. Wouldn't that be cool? But I bet a few of you would be. Started to say if we did something maybe on April 26th. But I'm just throwing that out there. Who could make it April 26th in a classroom in Tuscaloosa? Wouldn't that be cool? Or at a coffee shop or something like that. All right, so let's look at Doug's investment plan. All right, Doug, talk to us, baby. Oh, you're driving. You can't. I'll talk for you. All right, so his philosophy, Doug's philosophy, and he likes green. I guess, Doug, you did it green because the color of money, right? You got a lot of green here.
You know it, Bobby.
I'm with you, baby. All right, consistently dollar cost average into low cost index funds while maximizing retirement and Roth opportunities. I like it. Risk tolerance. He is aggressive with 100% equities. Okay, I like it. Asset allocation, 25% Russell 1000 base fund. So he kind of likes the, what we call the smaller caps, right? 25% of that. Lowest cost index, like option offered at work. Good. So it's got a low expense ratio, which is good. And then he's going to put 75% in the Vanguard S&P 500. So he's going with large cap, and he's got some smaller cap stocks with the Russell 1000. Now, is it a Russell 1000 or a Russell 2000 fund that you've got?
I believe it was the 1000.
Okay, Russell 1000. Because like the regular Russell, I believe it's a Russell 2000. But, double check on that if it's Russell 1000, Russell 2000. Contributions, he's going to payroll deduction every 2 weeks. Okay, so my contributions and max. I hate pulling up y'all's actual numbers and stuff. We'll just all assume we're lying on numbers, okay? So contributions to the max, he's going to max out his $6,000 to his IRA, contribute $3,000 every month to non-retirement, all automatically. I like it. So no rebalancing. He's going to look at stuff annually. He's got a 401k, an IRA, and a non-retirement, just a regular margin account. Objective 10 million or retire at 60, baby. I'm all with you. So beginning balance $4,373,785.98. I'm just making up the cents. Yearly contributions $97,000. Years until retirement 13. Projected balance $17 million at 10% rate. 10 million in 7.5 years at 10% rate. Retire at 54 and a half. Look at that, Doug. I love it. How y'all think Doug did? Beth, what grade are we giving Doug?
We're giving him an A+.
Yeah, 100. That's great work.
Let's give the man 100. Right? So let's move it over to the side, since I don't want to. I think it'll bring up everybody else's grades and stuff. I don't want y'all like getting mad. Y'all write on the reviews. Oh my gosh, that fat black glass wearing 9-toed spam wearing some bitch. I don't want y'all talking about me. All right, so we gave.
Hey, Bobby, can I do a commercial for my favorite benefit that we have at work?
Oh my God, yeah, Doug. Come on, baby.
All right. So, and I think a lot of people probably have it, and it's kind of a hidden benefit, is this Roth in-plan conversion, where so we can contribute up to the maximum to the regular Roth up front. I think it's 19. I forget what the exact number is. But then we can put in after-tax money and immediately flip it to a Roth, and we can take it all the way up to, I think it's $59,000 a year.
Oh, heck yeah, baby. I love that.
A lot of people, at least at my work, they don't know about it and they don't do it. And if you really want to be an aggressive saver and sock away a lot and never have to pay taxes again, I think it's one of the best benefits out there.
That's awesome. Anyone got any questions about that? I think that's a great benefit. Yeah, look, y'all. And the problem is you got all these people in your human resources department that run this stuff that have no idea about these things, right? That's the problem with a lot of human resources department. Maybe yours is not that way. So, make sure you get the information that you can on that. But yeah, anytime you can do something into a Roth, that's one of the things we were able to do with the government is, we were eventually able to put things in a Roth, thrift savings plan, which is kind of cool. All right, I think I got Kyle's up next. Let's see, Kyle. How's Kyle? All right, let's critique Kyle here. Look at this. Is this yours, Kyle?
Yes, it is.
This looks professional.
Yeah, it's a little wordy, but.
Well, listen, a lot of people are wordy. Some people are visual, right? So talk to us about your investment plan here.
Yeah, so I broke it up. I kind of spelled out my philosophy in the left hand. I said in all aspects of my money management, I want to be simple. I want to have low fees. I want to be diverse, to diversify. I'm not afraid to be 100% invested in the stock market. I want to keep the majority of my money in the Vanguard Total Stock Market Index. and the Vanguard 2055 Retirement Fund. I got interested and learned about the wheel and all that. So I wanted to kind of have a little bit of my money just for fun and just to kind of see how all this works. And then I just had for this thing a goal that would be kind of cool would be to, it's not a retirement goal necessarily, it's to find a way to live on the frugal side and stretch some of my passive income to support a frugal lifestyle. So on the right-hand side, I put down my 4 accounts. I didn't put any dollar values on them. So I have my brokerage account with Vanguard, and that one is buy and hold VTSAX. That's like 70% of my net worth. And I'm a full-time student, so my current income is really low. And I've considered maybe it might be a good idea at the end of the year to take out a small amount of that, because I know I will pay a 0% long-term capital gains rate on it. But that's a distant problem. And then I have another 20% of my net worth in an IRA, a Roth IRA with Vanguard. And that's where the target date retirement fund is. And I like that one because it exposes me to international stock and a little bit of bonds as well. And I don't have to worry about rebalancing it because the company will do it for me. And then I have on the bottom, I tried a lot of different brokerage apps on my iPad, and I really, really like Webull is one that's called, Webull. It's a little bit like Robinhood, and it might not be that great for like really complicated investments and stuff or complicated trades, but I found it was really fun and intuitive to use. So I'm using that one on the wheel strategy. And TQQQ is volatile as hell, and it's a roller coaster, but it's very interesting.
Yeah.
And then I opened up an account with Tastyworks, and it was like, all you gotta do is put $2,000 in, don't touch it for 3 months, and they will give you $200 to $250 worth of stock. So I just have my money sitting there, and they gave me 5 shares of Southwest Airlines. So
how cool is that? Yeah.
And it's easy, and I read through the fine print, and to the best of my knowledge, all I have to do is keep it there for 3 months and I'm good. So I don't like Tastyworks app on like an iPad, but I like it on the desktop. So yeah, that's it. But the brokerage accounts for the options trading is a small amount of my net worth. I don't want to get too, I don't want to sacrifice my nest egg to pursue something fun like that.
I like it. All right, Zach, what grade we're giving Kyle? You know what Kyle did? Kyle did really good.
Yeah, I mean, I love his comments, and I love that he has his head all the way around what he wants to do. He's got a good reason for everything. I really like the format and the layout too. It's easy to look at, and it's it's easy to follow. I think we give him 100. Yeah.
Yeah, good job, Kyle. Now let's see what y'all are chatting about. Let's see what's going on here. Some of y'all may be saying, don't share mine. That's fine. This makes you want to do yours over. Wow, Catherine, I thought yours looked good. Let's see, what is it saying? Oh, Mel. Okay, I got Mel's up here next, I think. Mel said we can share his. Let's see Mel's. Mel, I owe you an explanation. I hadn't reached you back yet, but I never let my options go to expiration, really. I always close things early, but you let that go to expiration. But that's fine. We'll talk about that later.
It's paid off for me today.
Oh, I appreciate that, Pat. I appreciate that. I mean, I'll be honest. Until I read the video, I was like, yeah, I should have closed those options once extrinsic value went way up.
Yeah. But no worry on that. Let me mute everybody.
I mean, it's all paper money, so that's good.
Oh, yeah. Mute everybody. Just mute all. All right. So let's see what's going on here. All right. So he's got several different pages here. So I think this is probably your one page right here, right? This is the one page that you'll hang on your refrigerator. All right. Mel, talk to us about this. What am I looking here? You've got yours compared to a very nice, looks like a Mexican dinner here. I love it. Mel, you're going to tell us about your little thing here? I like it.
Retired military, so I have a military pension already.
Mm-hmm.
So I just did like a future value of what that pension would look like.
Yeah.
I'm already working for the government, planning on another 25-year retirement. So I just fast forwarded that out, the annuity out to that point. But anyway, and then some staples, right? Rice, beans, and tacos. So one is my, you have the same thing. I know, Professor, you're TSP, right? So I did my TSP a little bit different. I did most of it in the index fund, but I have some in government and then some in the small cap, right?
Sure.
Just to diversify. And then I have a military TSP that I can't add to because I retired, but it just sits there and grows. So, I mean, the only risk there is the growth, right? So,
and you've got the same allocation as your civilian TSP.
Right.
Okay.
Now, the civilian one, the government still matches, and I take full advantage of their matching. So, and then, like I said, I put an enchilada on there because that's what most people like, and that's my Roth. And then I put there the tamale. Not everybody is favorable, but so I have some crypto and some doing some options trading. And my idea there is I did several readings on crypto. A lot of there's some good stuff on Amazon and Netflix about crypto. How it started, what it means. And my biggest thing there is the guy was like, give me less than 1% of your portfolio and give it a try. And so that's where I'm at, right? I'm trying to put some in crypto, but not my whole portfolio. It's like less than 1%.
Okay, awesome. Man, I like how you did the picture and you did the little, hey, the beans, the taco. I like this. So you were looking at retirement in 12 years. Awesome. Great job. Yeah. All right. So let's see. Christiana, what are we doing for Mel's grade here? We're going to treat him well?
Yes. For one, I love Mexican, so that was very appealing just to look at that. And I love the plan itself because you're tying it to what you like. So definitely 100.
Good man, 100. Come on, man. That's good. I like this. We should do all of our grades this way. Wouldn't it be cool? All right. So anyone else that wanted me to pull theirs up? I can't. If you don't, that's fine. I don't want to embarrass anybody, but I love those. Those are really, really good. It's good to just share your plan, right? And it's awesome to have you plan. Now, what I want y'all to do, promise me, you're going to print this out. You're going to take it to Office Depot or Staples or Kinko's or whatever, and you're going to get it laminated. Put it on your refrigerator. I want you to think about this thing, but don't think too much, right? The more we make this complicated, the worse it becomes. It really does. Just keep it simple. Do your plan, work your plan, and realize that assets in the markets generally go up over time, even though we may have small corrections along the way. Anybody else that I'm missing? So how many of y'all said that y'all could be in Tuscaloosa on the 26th? Anybody? Not on come, there's just 2 or 3 of us.
I'm going to be there.
Catherine could be there. Brad could be there.
And I would love to meet you. That would be awesome. I'm bringing my husband and we're coming in on Friday.
Okay.
Friday morning and staying till Sunday.
Yeah. So let's look if y'all can make it. It might be kind of cool, right? We can book a classroom there or something, or in one of the things there, they got a little coffee shop or something. That can be cool. Sit down, just chew the fat. We'll all be finished by the 28th, and I'll have my graduation that was delayed by COVID. Actually, have that week, so that'd be cool too. All right. So, anybody else that we need to share with? Anybody else? Just reading through the message. Yeah, I'm hungry too, Evan. Except Beth and I went to Ruby Tuesdays on Tuesday. We wasn't supposed to, but I pigged down on the salad bar. Oh, Brad can come all the way from Wisconsin. How about that, Brad? He's committed. I may fly back with Brad to Wisconsin. I need some time away. So that'll be okay. So we'll see if we can't work that out. Okay. All right. What else? Oh, this. Okay. Let's talk about today portfolio management, because it's all about, putting on the trade is fine, right? I mean, anybody can put on a trade, but it's really something to do slower internet connection, to do portfolio management. So I want to talk to you just a bit on portfolio management. First, let's look at the markets. It's kind of weird. The market was up 0.6% just moments ago, and now it's like the world's waking up and saying, oh no, the news is bad, inflation is worse than expected. The Fed may even have to do 3/4 of a point raises at certain points. Hey, you know, you look across the world, it's just bad news everywhere. But I've told you that news is noise. But what I do look at is the bonds. So let's look at the bonds. So that's the E-meetings. Let's look at the bonds real quick. And then I'll shut this off. Maybe my computer resources will be a little better. This is the bonds, right? This is the 30-year bond /ZB as we look at the futures on bonds. Look what happened, y'all. The high occurred back, when was this? Last Thursday. And then look what has happened. I mean, the bond market is in shambles. So it is really taking a hit in the bond market. So generally, bonds have what kind of relationship with stocks? What's the general relationship?
Looking for inverse?
I'm looking for inverse. It's generally inverse, right? So, but that's not exactly what we're seeing here. Now, what would make bonds go down? Let's think for a moment. What makes bonds go down?
Interest rates.
Rates increasing.
Interest rates increasing, right, makes bonds go down, even though I think this may be just a little bit overdone. But the bonds are certainly going down. Let me close this. So we look at the bonds down. We'll shut this down. But I don't want to shut it down entirely because I got to show you some stuff. All right. So let's look at the market. And I like looking at things on a linear regression channel. You can just add a linear regression, get you a free account at tradingview.com. I love their charting. And then just add a little indicator here called linear regression. This is on a daily chart. So I call the bear market right here. I don't care if it's technically a bear or not. I said we are in a period of declining prices in the S&P 500. So this is SPY. And I looked like a fool at the time because the market did nothing but go up to the top of the linear regression channel. And now, as we see, we are down below the 200-day moving average. Now we're down below the 50-day moving average. So what do we call this when the 50-day moving average goes below the 200 moving average? Anybody remember what that was? What the technicians call this?
Is it the T something or cross something or?
Yeah, the cross. They call it the death cross, right? So they call this the death cross. When the 50 goes below the 200, there's a death cross. And so a lot of people are really becoming bearish. Now, the reason that I'm bearish is because, you know, ever since we go back to November, December, we are in a period of declining prices. It's pretty easy to see. So as we navigate through a portfolio of options trading. Now, this is why I don't like crypto. Why do I not like crypto? Crypto is an asset that I have to buy and hold. So even though I am a buy and holder in a lot of ways, I like to have things that I can trade derivatives around. So I want to trade options around. Now, the day is coming when we will be able to trade puts and calls and derivatives around the crypto space. So one day there will be puts and calls on crypto so that you can reduce your cost basis. But there's really no way for me to reduce cost basis other than, I guess, buying as price goes down. I guess I can do that. But as far as using the derivative space to do that, there's really nothing that I can do, right? There's nothing that I can do to make that happen. So today, I want to talk to you about something. I don't know where you get this information. This is not taught in a textbook. This is not taught anywhere that I could think of. This is portfolio management. This is managing a portfolio of options positions. So it doesn't really apply to you holding, you know, the S&P 500 in a mutual fund, or you just holding shares, you know, for the long term for your retirement. But if for those of you who will become involved in options trading, I'm going to show you how to manage an overall portfolio. See, the mistake is people say, oh, I put on a trade. Now I got to manage the trade. That's how the beginner thinks, right? I've got one trade on. Oh no, my one trade is losing money. Oh, I've got another trade on. This one's making money. I'm confused. So how do you manage a portfolio? You manage a portfolio by monitoring the Greeks. You remember the Greeks, right? So the Greeks that we use or that I use. Now, kid, you're getting my biases, right? You're getting my biases, however you say it. You know, this is what I use. I don't look at gamma. And the reason I don't look at gamma is because I close my options prior to expiration. So I don't have to worry about that sudden movement of delta that can happen close to expiration. So I don't monitor my gamma. But what I monitor are my deltas, my theta, my vega, which is technically not a Greek letter, but it is the name that we assign to volatility in our portfolio, right? It's the volatility component. And then I measure my buying power usage. Now, with those four things, ladies and gentlemen, delta, theta, vega, and buying power, you can manage a portfolio of $2,000 or you can manage a portfolio of $2 billion. And all I need are those four numbers. I need four numbers to be able to manage an entire portfolio. That's the cool thing. All right, so I'm going to share a spreadsheet with you. I'll send it in I'll put it in maybe the week 15 folder for you to use. But let's look at an IRA that I have. Okay? Let's look at an IRA.
We're about halfway through.
Okay, so here we go. Let's look at our, and so what I do is in this little thing, and we got about $101,000 in. So I'll kind of, you know, periodically I'll put in the date, I'll put in the net liquidation value in my account. It's an IRA account, just a regular IRA. And then what I do is I monitor the Greeks and ratios. So here is the spreadsheet that basically tells you, hey, what is my portfolio and what should I do? So let me just give you a couple of things. The first thing I do is I go to my portfolio and I go to this page, the monitor tab, and I make sure I've got the right account. Let's see, there are all kind of accounts here. This is the regular IRA account. And you see I've got a lot of different trades in there. So here's what the individual investor does that makes mistakes. They're like, let's see how this one's doing. Hey, I'm up 85%. Yay! You know, or they'll look at this one and they'll go, hey, I'm up $650. Close it, right? I'm up 80%. No. Here's how you do it. I'm going to take the groups off so I don't see those trades that I've got grouped. And I look at one thing and one thing only. So you see I've got positions in the E-minis, I've got positions in the micros, and I've got positions in SPX. Okay, so I close all that and I manage my portfolio based on just a couple of things. And it's this, right? So I'll put in what my deltas are. So let's just do that, 47.95. And this is today's, it's changed a little bit, right? 47.95 is my delta. Then the next thing I do, now this is weighted delta, my SPY weighted delta. This is non-weighted delta. Don't worry about that. You can even hide that column if you want to. So this one I go by, this is my weighted delta. Everything is weighted to what? SPY, so that I can compare apples to apples. Make sure your deltas are beta weighted to SPY. If not, then all this goes haywire. See, right now I know that my deltas in the E-minis is 70.38. What does that mean? That means that it's the equivalent of me owning 70 shares of SPY. So my deltas in the micros are 30. What does that mean? It's the equivalent of me owning 30 shares of SPY. But then I've got negative deltas in SPX. What does that mean? That means it's the equivalent that I am short 53 shares of SPY. If you add all three of these deltas together, you get 47.40. Now, things go haywire if you take this off and you're not weighted. Then your 7 long shares of, or 7 long deltas of just DS 3 long of the micros and -5 of SPX. So this is apples, oranges, bananas. When you beta weight it, apple, 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 add your apples, and you get the number of apples that you own. Am I bullish or am I bearish in my deltas? Kyle.
I just want to let you know my phone alarm went off for the musical interlude.
Okay.
Sorry, your delta. So, I mean, that means, I'm hard pressed to explain how that works. So your portfolio is the equivalent, the entire portfolio is the equivalent of 46 shares of SPY in terms of its value right now, right?
Long SPY.
Long SPY. Okay, so then if it's long SPY, then every dollar SPY goes up, your delta should go up.
Well, every dollar that SPY goes up, I should make $46 in my account.
Okay, because it's, yeah, that makes sense to me.
Okay, so Zach, am I bullish or bearish?
You're bullish. No, you're bearish because it's under 50.
No, I'm slightly bullish because I have positive deltas.
Okay.
All right, I want everybody to understand that. I am positive delta. So if you're positive delta, the portfolio is slightly bullish, okay? I am bullish. It's the equivalent of me owning 46 shares of SPY. So if I own 46 shares of SPY, I would hope that SPY goes up, right? So I have 46 shares of SPY. So everybody needs to understand that I am bullish. Now, this means also if SPY goes up, the value of SPY goes up $1 in a day, my account should be up $46. If this was -46, I would be short or bearish on the market, right? My positions, overall positions would be bearish. All right. So if the delta was 0, I would be neutral. Questions about delta. It's very, very, very important. I want you all to know, you got to know deltas.
Just a quick question, Bobby. I came across Dan Passarelli's book, Trading Option Greeks. Is that one that you've read? And if you have, what do you think about it?
I've not read it, but I could say it's probably a very good, anybody that's talking about option Greeks probably knows what they're talking about.
Yeah.
So, I'm slightly bullish the market, right? Slightly bullish the market. All right, let's take a little interlude here. I think y'all can enjoy this. Let me pause our recording. All right. Now, here's what we're doing when it comes to theta. All right. So we know we're long in the portfolio, right? And you see from different days, you can see here back on March 23, I was, definitely short the market, long the market, long the market. Now, here's the interesting thing. For those of us that sell options, if you sell options and your deltas are positive, what happens if the market goes up? The inverse of what you would think. So if the market goes up and I've got 47.95 deltas, my deltas will be lower. So if the market goes up tomorrow, my deltas should be even lower than they are now. It's kind of strange. Now, if the market goes down tomorrow, my 47.95 deltas that I have now will become increasingly larger. So I want you to be aware of that relationship. So I know what happens. If I look tomorrow and I wake up, roll out of bed, get the stuff out of my eyes, roll over, oh, the market's up. I know that my deltas that were positive will be increasingly lower. If the market is lower, my deltas will be increasingly positive. Now, theta. What is theta? What is theta? Theta is the time decay, right? So if I sell options, I'm collecting theta. So theoretically, this means that as time passes, as a day passes, so remember, delta is direction, theta is time. So my theta, if I'm positive theta, and you will be positive theta if you are an option seller, then your theta will be positive. What this means is this: each day, my account should decay by $84.85. In other words, my account the option should decay, or my account should go up $84.85 per day. How about that? That's cool, right? So you can use the Greeks to figure out how much your account should go up. So if my theta is 84.85 per day, you're expecting the account to go up $84.85 per day. Now, sometimes theta works against you though, and we don't get to keep all of that theta. So on average, you can expect to keep 25% of your theta as profit. Now, where did I get that study? I wish I could give you a link to where I came up with that, but it was Tasty Trade and Sosnoff's team that did the back testing on that, and they found that on average, if you sell $1 and collect $1 of premium, then you'll keep about a quarter of it. So my theta decay is $84.85. So I would expect my account to go up $84.85 on average per day, all things being equal. But sometimes it goes against you. And overall, I should keep, $21 a day, a quarter of that. Questions about theta? Now, theta is a measure of risk as well. So the more theta that I have in my account, the more risk that I take on. So what's a healthy amount of theta for an account? A healthy amount of theta, and I have a little note here, right, that I want to keep my theta between 0.10% and 1% of my net liquidation value. What is net liq? What is net liq? Net liq is my account balance. If I were to close all of my positions today, how much money would I have in the account? So I record the net liq, about every day. So my net liq is 101,172. So what is a healthy amount of theta for my account? Well, if I have 101,172, the minimum theta I would like to have in my account, 101,172 times 0.001, right, is $101.17. That's about the lowest that I'd like to be. What is my theta currently in my position here? I've got $84. So as you can see, I've got a little spreadsheet that gives you this ugly, you remember your mama and papa used to take that old nasty Malanta stuff? You remember that stuff before they go to bed or after they'd eat chili? They'd take that Malanta and it was this ugly color here, right? So it says that I'm only at 0.08% of my account, right? So what happens if I change this to $117? It turns nice and green. It lets me know that, hey, oh, Bob, you're doing just fine, baby. It turns green. My spreadsheet turns green, right? And to let me know that I've got ample theta in my account. Questions on that? Now, if I go too much, it'll turn back to Malanta too, right? So if I said I had $17,000 of theta, it's going to tell me, hey, Bob, you're taking too much risk. So right now, it basically says you're not taking enough risk, Bobby. You need to sell more options. Rome wasn't built in a day, though, so I do those every day, right? So I'm listing these trades that I'm putting on every day in there to increase my theta. Let's go back to the Greeks and ratios. All right, the next one that I look at, now I've got all kind of TV ratios in here, and I've got what the ideal ratio is, and the delta and the vega, and the delta and the theta, and all that. I really don't look at this. You can look in there, and if I want to track it, I can, but I really don't look at GH and I, okay? So what I look at my theta, my SPY weighted theta. I look at my theta, my delta, my theta, and I record my vega. Now, what is my vega? My vega is negative 253.38. This is what hurts you as an option seller. So what this means is if volatility increases by 1%, how do we measure volatility? We measure volatility by the VIX. So if volatility goes up 1%, then I should be down $253, all things equal. Now you got all these other things working too, right? If it goes up, SPY goes up $1, I make 45 cents. If the vega volatility goes up, it works against everything else, right? If time goes by, I should be making 84. So all these things kind of work in conjunction. But what I do is kind of look at this overall, and I come up over here And the fourth thing I look at, so we record deltas, thetas, vegas. Then we record buying power used, how much buying power used. So on the platform that I already closed, it'll over on the right should say how much buying power you use. In other words, for the options that I've sold, what is the amount of collateral that my broker is requiring me to put up in buying power? So we've got a $101,000 account. And this is one of the things that's on the monitor tab of your platform. It tells you how much buying power you're using. So in a $101,000 account, I'm using $34,000 of my account as collateral. All right. So what percent of my net liquidation value is that? 34.38. Now, through trial and error and through blowing up accounts and losing tons of money, as I have in the past, I have developed some, along with some studies, I think from Option Alpha and Tasty Trade and Sosnoff's group that they come up. Here's what I use, right? I've got some rules that I use on buying power, and they're all based on what VIX is, or the volatility index. So if you have a VIX between 20 and 30, I say don't use more than 35% of your maximum buying power. So I'm using 34.38. Let's see what the VIX is. Let me log into this account so you can see VIX. And I think VIX today is about 23. So it's actually something that you can look up and you know, figure out what the VIX is. So we'll look at that a little bit. So trust me on it. When I just picked up the VIX, which is the volatility or the fear index, it is about 23 today. And this thing tells us that with a VIX between 20 and 30, don't use any more than that 35% of your buying power. Now, remember, I told you when volatility goes up, that's when we can ramp up a little bit, right? When the market is uneasy and you got a VIX that is greater than 40, you can increase your buying power or take on an additional risk. So my max risk in an account, if I don't want to blow it up, is 50%. So if the VIX were to increase above 40, then I could say, hey, Bob, ramp it up a little bit. If VIX is very low, between a VIX of 10 and 15, don't use more than 25% of your account in buying power. Any questions on that?
So is the idea then that guideline is that when the volatility is really high and you're focused on selling options, you're kind of, you're increasing the amount of money that you're willing to sell options in a high volatility environment, hoping that volatility will go down again and you'll profit. Do I got that right?
Yes. Okay. So when volatility is increasing, the price of those options that we sell swells like the balloon, remember? And so it may get basketball size or beach ball size. And so we're much more apt to sell options when volatility is higher. Now, keep in mind, that's when the world is running, right? And you and I rush in and say, hey, we'll accept it because we're the insurance company. We're writing the insurance for everyone else. That's what option writing is. We provide insurance for the market. So people want to buy puts when volatility has already increased. That's a dumb thing. You don't buy puts, but they're like, what if it goes down farther? And you and I know that over time, remember our lecture on volatility is overstated. So as volatility increases, it's okay to put more chips on the table, right? Because the pot odds are in your favor for those of you that play poker. It's all a pot odds thing. When volatility is low, you don't want to have a lot of money on the table, because if volatility increases, what you sold when it was a small balloon, you're going to have to buy back when it's the size of the beach ball. That is painful. So as volatility expands and gets way out there, like the VIX was at 80 plus during the COVID crash. What a great time to sell a put. Now, did you have the guts to sell a put during that max volatility expansion? But that's the time you sell it, because even with the COVID crash, volatility was overstated. So we're able to sell the volleyball and then maybe buy it back or close it when that thing decays. Remember, options decay. That's our theta. And we buy them back or close them when they're much, much smaller. All right. So we've recorded our buying power. We've recorded our theta, our delta, and our vega. So how do you know if everything's okay? So I've wrote a code. Now, do not blindly use my code. You understand my code, right? This is I don't look at O and I don't look at P. Why do I look at them? Because I want to just see, right? There's some adjustments that I've written here. So this basically says, if you want to take care of that negative vega, Bob, you need to be short the market by 174 deltas. So that means that I am positive 45 deltas. So I need to be a negative, 135 deltas if I decrease my deltas to where this suggests. I don't go by this. I just want to look at it. Here's what I go by. I have a suggested SPY beta weighted delta neutrality adjustment that tells me whether I should adjust my delta. So I'm basically looking to become delta neutral. I don't want to be too bullish or too bearish. I kind of want to be neutral. So what this tells me, I have a formula in here. As you see this, if this is greater than this and your net lick is this, the absolute value is this, don't use it blindly. I want you to look at it. So option alpha recommends that your delta be 0.001, while Tasty Trade recommends a delta of 0.002 to 0.004. And I wrote in some other things. If we have the Black Swan hedge, downside protection, I just chose this. So this is, I just blindly use this. I don't blindly use it. This is the code that I wrote that tells me if my deltas are too long or short. Let's see if this thing works. So let's say all of a sudden that I log in and my deltas are 500. So it's almost like I'm owning 500 shares of SPY in this account. Am I too long? Well, let's go over here. And the little spreadsheet says, hey, Bob, you are way too long, right? And then it comes up with some type of delta adjustment to kind of, now, do I immediately go, I have to get negative 652 deltas? No, I don't do that. But it does tell me, hey, Bob, you need to get short deltas. But most of the time, I kind of keep things kind of smooth, you know, not too far out of the ordinary, so that I remain basically delta neutral. What does delta neutral mean? A move up or a move down in the market doesn't kill me. It doesn't hurt me. It doesn't kill me. I want to remain delta neutral. So how do I manage an account? I manage an entire portfolio like this. Okay, I need a little more theta. So I need to sell some more options. Rome wasn't built in a day. You see, I've gone from 0.01, 0.04, 0.07, 0.08. Tomorrow, I'll probably be 0.09. And by, you know, Thursday, I'll probably be 1% right on target. Second thing I look at is, hey, do I need to adjust my buying power? No, I don't. I'm right at the max, right? I'm at 35%, where the VIX is telling me where to go. Now, what about Vegas and changing all that? You don't even have to look at that. The third thing I look at, so I look at what? I look at this number here. So F13 is where I'm looking. I look at M13 and I look at Q13, which basically tells me if my deltas and my vegas are in line, and it says no adjustment. So I can look at three numbers, right? Q13, I look at M13, and finally, as I said before, we look at F13, those three components of my spreadsheet to know if I'm good to go. Rome wasn't built in a day. If it does tell me I need an adjustment, I'll make an adjustment. How would I get negative deltas, Kyle?
Let's see.
I'm an option seller.
Well,
I want negative deltas.
You'd want to put in a trade that benefits you with if SPY falls. So exactly. You're doing something that is shorting the equivalent of shorting SPY. Have I got that?
No. So what would I do if I'm an option seller?
Probably sell it. I guess you'd want to sell a call.
Give that boy an extra point. Yes.
Ooh.
Yes.
So well, so your buying power right now is really close to your 35% limit. So wouldn't you not really have much room to sell another option?
Right. So in the next day or two, but Kyle, what if I get to 36%? What if I get to 37%? Am I okay? Remember, I'm a risk taker. So I'll probably push the limits of my own rules, right? A little bit. right? So yeah, but you're theoretically right. 2 areas of risk. Remember, theta is a measure of risk. I don't want too much theta, right? Because you can have too much theta. Theta means I've sold a ton of options, and you go, "Well, I'm doing good," and then all of a sudden your account gets blown out. These 2 numbers, buying power used and theta, are here for one reason: to make sure I don't blow up, to make sure that I am in business tomorrow, to keep doing what I do and selling premium, because volatility is overstated in the long term. The insurance makes more money than the insured. I am the insurance company. I don't have actuaries that work on my staff to tell me if I'm okay. I don't have regulators looking at me to make sure my account is within, certain parameters. So I had to develop these parameters myself. So I, as a professional portfolio manager, have, based on research that I have done and managing accounts for a number of years and looking at all the research available, have determined I'm comfortable with a theta risk of 0.01 to 1% of my account and not using more than certain parameters based here on my rules for buying power. Then the third thing is, do I need to be delta adjustment? Because I want to be delta neutral, because I don't know if the market's going up or down. I may have a hypothesis that the market's going down, but I don't know. I have no idea. Now, I want to leave you with one thing before we go on. Any questions on it? That's portfolio management, y'all. That's it. That's it. Those 3 things. Kyle, you can manage, and I'll give you the spreadsheet. It's yours. You can manage an account that's, 10 billion. You can manage account that's 2,000. Just looking at your Greeks, setting up some parameters and going with it. So that's what I want you to do. I want you to be able to be your own portfolio manager. Selling premium. Why? Because I don't want you buying premium. Why do I not want you buying premium? Well, let's look at it. Okay, say Kyle's like, Bobby, you're an idiot. All right, which is true. But Kyle says, hey, I'll tell you what I'm going to do. I'm going to go out here to 66 days and I'm going to buy a call because I know the market's going up. So he says, I'm going to buy a call right here. All right, so here he goes. He buys a call. Well, let's look at what that looks like. You're a buyer of options. All right, why do we not buy options? Because analysis, PO, expiration. Hold on. All right, here's the risk graph of a call. He buys a call. All right, what if the market does go up? He still loses money. So here we are at 438. If the option goes up to 445, that's 7 points. He still loses money at expiration. Does everybody see that? In fact, in the next 66 days, SPY has to go above 455 or so for Kyle to make money. Now, he has unlimited profits, unlimited. The boy could be a millionaire tomorrow if SPY goes up high enough. What are the probability that it's going to go up and he's going to make a profit? 34%. So Kyle just bought an option with a 34% probability of losing money. I mean, of making money. So guess what? Some idiot like me on the other side who says, I'm the insurance company, Kyle, you want to buy an option? I am more than happy to sell you one because I have a 65% probability of making money. So here's why we don't buy options. If you buy options, you don't have a high probability of success. You have to get a dramatic move. Not just a move, right? You got to go up 15 points or more to make money. That's why we don't buy options. The probabilities, the odds are against you. Now, why do we sell options? What if we were to sell this same option, right? So what if we went in here and sold the same option? Let's go here and let's say that you sell this option 66 days out. Now you have the inverse. You've got a 66% probability of making money. Remember, I never take an option to expiration. I'll close it when it gets to 50% profit. What's the probability that I'm going to make a 50% profit on that? 80%. That's even better than 66%. I have positive theta. Now, my profit is not unlimited. It is what? It's capped. But by capping my profit, limiting my profit, and what's my maximum loss? Here's where people get scared. The probability is I could make, I could lose everything, lose my house, lose my dog, lose my wife, lose my kids, lose my, lose my pigs. Probability that's going to happen is very minute, right? And if SPY were to go up, I'll close it before we get to this. All right, so let's look at it on the curve. Here's why we sell options. Look at this. I make money, though a limited amount, if the price stays the same. I make a profit if the price goes all the way where to where? 455 is my break even. Dang, this thing can go up 438 to 455. Do the math. I make money if the market goes up. I make money if the market stays the same. I make all my max profit. I don't care how far the market goes down. But I have unlimited losses if this thing goes up. Now, do you see why we sell options? Now, you can do this as a spread, as a vertical spread, right? You can sell a call and buy one here to limit your loss. Let's look what that looks like. So you say you don't want to do an undefined trade. So you could sell the 439, then you could come out here and say 5 points up. We're going to buy the 444. What does that look like? Let's go to the curve. Still looks pretty darn good, right? So now my loss or my profit is still boxed into the downside, but I've limited my loss to the upside. So whereas this used to go like this, now you've capped your loss to the downside. The only problem is by doing that, by limiting your risk, your max profit's this, your max loss is 195. Now your probability of profit goes down to 56%. Okay, how can I increase that? You can take more risks. So move the 444 up to 449, 10 points wide. Well, you increase it to 58%, right? But you're taking on additional risk. Now your max loss is 416, max profit 582. But I don't want to go into really the credit spreads now. We'll deal more on that in options. You sell options because volatility is overstated. You want to be the insurance company, not the insured, right? How many of you would rather be Geico than the homeowner that has Geico policy? You want to be Geico. Why does Geico have the money to sell or to have so many advertisements on television and to bombard us all the time with that little gecko or whatever he is? Well, the reason is they're selling premium. They collect premium. They're selling insurance. And that's what we do as option sellers. Question. Anybody excited about this? Isn't it great? So now you can become a portfolio manager. All you got to do, I don't say all you got to do. I want you to understand how we're doing it. But you got to monitor your risk. How do you do that? You monitor your delta, you monitor your theta, you monitor your vega. You have some process to make sure that you're not using too much buying power and to keep yourself directionally neutral. Now, if you have a stronger opinion that the market is going to go down, I could reduce my deltas by selling options on the call side. I could. But for my algorithm that I have in my spreadsheet, I'm effectively delta neutral. I'm effectively, even though I'm slightly bullish, for all intents and purposes, I'm delta neutral. Cool. All right, guys, I hope y'all are excited about this. This is exciting stuff. And I know some of y'all, I don't want you to do this in your, with your retirement money, but I want you to be able to have those accounts where you're starting out with $2,500 and you're, doing some things in the micros, you're selling some futures options, you're doing some things. And we'll break the spreadsheet apart a little farther next time, and I'll show you some of the formulas I've written. So let's say that you want a 50% return. Okay, maybe that's too aggressive. How much premium do you need to sell over a year to make a 50% return based on the calculations of how much beta you'll retain, how much risk you need to take? We'll show you all those things next time. Questions, comments? Awesome. If not, I will see y'all Thursday.